What's up, friends? Chelsea Winstead here. If we haven't met, I am a home financing strategist and a mortgage broker. My hope and purpose is to give you context into what really matters when it comes to purchasing a home. And what I want to chat with you today on is what to expect and the reality of what 2026 purchasing is going to look like. There is a lot of data and suggestions that as we move into the new year, we are going to be seeing a very different scenario when it comes to the market, when it comes to behavior for home buyers. As many of you, especially if you've been looking for the past few years, know, it's been kind of rough. I mean, this past year we saw, average rates go over 7%. A lot of markets hit their peak at the end of last year, beginning of this year. What I mean by that is, home prices really hit like the top level. And a lot of people just truly have been priced out of being able to purchase a home. I think if people can't recognize and understand that, there's a little bit of, tone deaf stuff happening. But with that said, what we are expecting to see in 2026 is a change for the better if you are a home buyer. And here's why. So number one, if you have been paying attention to the news at all, you've probably seen that mortgage interest rates have started to slowly come down. I always mention this, so as like a caveat, interest rates are always personal. So even if you look at the averages, it's not always a guarantee that, your rate will be that. But truth be told, the average has moved down pretty significantly. However, I do think that interest rate is often demonized. I don't think a lot of people truly understand that the big change for a lot of people have been the home prices going up, not necessarily the interest rate. But the reality is that there are a lot of markets right now, and they have been kind of throughout the year, that have been cooling. Okay. So what I mean by cooling is it's not a crash. There's not like a bottoming out, homes aren't just like completely, worth half of what they initially were. But the reality is that it's a very different scenario in a lot of markets. There's what cooling essentially means is that the market is correcting itself. So when homes for years, whenever we had 2 and 3% interest rates, what was happening is people were buying at such a speed that it drove the home prices to kind of exponentially go up, and people continue to purchase, right? So supply and demand, it's kind of the law of economics here. What we are seeing now is that the price points have essentially reached their max capacity to where the demand has started to trail off, right? So for as long as people will buy something, that price will either maintain or continue to go up. But when people stop purchasing, that's then when you see the market correct itself. I'm licensed all over the country, but I do a lot of business heavily in the Southeast. I would say that Texas and Florida right now are 2 states where I am seeing, technically even parts of Georgia, I'm seeing some major corrections happen. And what I mean by that is, homes are sitting on the market between 45 and 75 days. We have sellers paying almost for all of the closing cost. And so when you start adding these things together, what does that mean for you as a home buyer? Well, it means that a lot of things are going to be really on the buyer's benefit as we enter 2026. So not only do we have interest rates going down, they have, been steadily decreasing. But in addition to that, now we have a lot of places where the markets are correcting themselves. And again, it's not a crash, but if you're a buyer, obviously your goal is to get into a home for the least amount possible, right? Like that's your best case scenario. Whereas the sellers, right? Like think if you flip the script here, if you're a seller, you want the opposite. You want to make the most that you possibly can. But the reality is that that doesn't then always benefit the buyers. And truth be told, I do genuinely think that a lot of people have been priced out of this market because of the combination of home prices exponentially going up and interest rates not being the nicest. And so in 2026, what I'm imagining is the following. I think Q1, we're going to have a lot of people jumping back into the market as far as buyers go and getting their numbers put together. I work with a lot of my clients anywhere from 6 to 9 months out from when they are wanting to purchase. And the whole intention is that we are running numbers. We're figuring out what is your credit score, right? Like not what is Credit Karma showing you, but what is your actual mortgage credit score? What does that look like? What's your debt to income ratio based on where you live and incorporating property taxes and homeowners insurance? How much is your monthly payment going to be? And we're really like game planning. I think Q1, there's going to be a ton of people who get into that mindset of what is possible for me. I think Q2, we're going to see a pretty decent heat up of, behavior. This is kind of indicative though of every year this happens, like this kind of prep. You start to see buyers jump in. Q3, you tend to have a lot of buying behavior. Q4, it tends to kind of trail off. However, this year in 2025, Q4, we've seen an uptick in mortgage applications, like one of the highest levels throughout the year. So I think that while I think 26 is going to follow kind of the normal trajectory, I think the amount of people doing this is going to be far greater than what we saw in 2025. Because again, I think this year we started out, it was kind of rough, it got worse. And now as we've kind of ended the year, it's improved as far as rates and prices coming down. I think as we enter 26, you're going to have planning happening Q1. Q2, I think you're going to see the people that look at their plan from Q1 and they feel good about it, they're going to go ahead and make that purchase in Q2. I think the people in Q1 that needed to do a few things and to get a few things ready, I think they'll be purchasing in Q3. And then depending on, how we continue to see the markets update, prices cool, rates continue to come down, I actually think Q4, where we sometimes see a decent trail off because of like the holidays and things of that nature, I think potentially in 26, we're going to see the behavior in Q3 is going to actually bleed into Q4 as well. And we're going to have like a big increase in just behavior overall. So when it comes to buying, what I really want you to pay attention to, does interest rate matter? Yes. But I don't think people realize how the price point is really your biggest battle that you're fighting in today's market. So even the difference in like a 6.125 and a 6.5, like, yes, there obviously is a monthly payment difference, but it's probably not as high as you think it is. Now, your monthly payment on a $350,000 purchase versus a $500,000 purchase, that's a big difference. So what I would encourage you to do is to really hone in on where are you buying? What is the market doing as far as, is it cooling off right now? Are you seeing that buyers have more of an advantage? And the other piece is that I would potentially also encourage you to do a little bit of digging, and even like on Google, just Google like where are the cheapest property taxes within, and type in your zip code, because I'm not lying, property taxes, y'all, is one of the most hidden and misunderstood pieces of the puzzle. Depending on where you live, this could add anywhere from, $150 a month upwards of $1,500 a month to your payment. And it genuinely depends on where you live in the country, not only the state, but also your city and your county and, where you are looking to buy. So I would say, like, a bit of a hack here, look up where you live and look up if monthly payment is something that you are very sensitive to and want to really like hone in on. You may be best off looking in an area where your property taxes are going to cost you the least amount of money, because that is something that no matter how low your interest rate gets, that property tax piece does not change. That your homeowner's insurance and your property tax payment, that's not impacted ever at all based on your mortgage or your mortgage interest rate. So just, something again that I don't think people often think about. And then when I put together the numbers, they could be looking either within the city limit or right outside of the city limit. And we're talking about a monthly payment that has a massive variation. So again, just a food for thought there. As you move into 26, number one, I would recommend planning. I think that so many people, and my hope is that the more I create content like this, the more that people will be proactive and not reactive. But the best thing you can ever do is if you want to buy a home in the next year, have a conversation with somebody, figure out where you currently are, because so many people assume that they know, and then they don't actually take this piece seriously. When they finally talk to a mortgage professional, it's when they've already found the house, it's when they've already fallen in love with something, and then they finally put all the information in, and then all of a sudden there's a surprise or there's a shock or something happens and nobody's prepared for it. It's just not fun. The way that I really encourage my clients to enjoy a stress-free home buying process is to do your financial piece as soon as possible, because it gives you enough time to make edits, make changes, make a plan if you need to, without being in the middle of the process and being wildly overwhelmed. So number one, I would say get ahead of the financial piece, run your numbers ASAP. This is again something I do every single time I kick off with a client. Not only do we run your personal info, we look at the market that you were looking to buy in. That would be my number 2 recommendation, is do a deep dive and actually understand, based on where you live and where you want to buy, get information on what's going on in the market. Right? Like figure out, is this a buyer's market? Is it a seller's market? How long are homes sitting? What's the average price point? How often are sellers paying for closing costs? Like get that information up front so you have a realistic expectation of what your journey is going to look like. Third piece I would recommend, and I'm saying this with a kind of a grain of salt, but not really, make sure that when it is time for you to actually match with a real estate agent, you are matching with somebody who is proven to be a rock star in your market, and you're not just going off of referrals or word of mouth. And I say that, this is something that, again, my team does complimentary for all of our home buyers. I do a personalized matchmaking session with each and every one of my clients who are looking for this. What this means is that I'm looking to see what agents are in your area that have proven production. Okay, so that's like a big piece of this puzzle. The shows are out there. Like on my side, money is money is money. Money is green. Banks have money. As a mortgage broker, I'm not tied to one specific bank or lender. But the reality is that, on the banking side, money is green. When it comes to your agent, that is such a different ballgame, because the crazy TV shows and stuff, while it's probably not that dramatic, or maybe it is depending on where you live, the truth of the matter is that real estate can often have a big swing on who you know, who you don't know, etc. A big thing I see a lot of people make a mistake on is they find someone on Instagram that they've never talked to, or they, I say that sometimes what you see is real, sometimes what you see is not. Part of the reason I do matchmaking is I actually look up the numbers and the production of the people you're interested in working with, because sometimes there's a little bit of a facade that goes on. And why this matters is, as a buyer, you have so much opportunity for negotiation. You have so many elements of things that you can take advantage of, and who you choose to represent you when it comes to putting in that offer really, really freaking matters. Okay, it really matters. So with that said, the third piece of this puzzle is that, you really want to make sure that whoever you are trusting to support you and represent you on the agent side is a true professional. They genuinely understand the market. They have a proven track record of negotiations, and that is something that my team and I vet out on your behalf, because not only do we have access to the platforms to show that production, but we do a personalized interviewing process to make sure that this person is legit and would have your best interest in mind. So that's the third piece of the puzzle for buying a home in 2026, is please make sure that you are working with a proven professional as a buyer, because again, who represents you and who is negotiating on your behalf can have a massive impact on what your overall experience looks like. Okay. It's going to be a fun year for home buyers. Also, if you're new here, my goal is to never convince people to do what they don't want to do. If you're a renter for life, I'm into it. Happy for you. Do your thing. What I'm here to do is I help people make things happen that they want to make happen. So if you want to purchase a home, I'm here to help you make that happen. Best way to connect. Again, number one piece of this entire puzzle is to run your numbers. Figure out what your plan is, figure out where you are, figure out if you need time to build something up, whether that be savings, whether that be credit, whatever that may be. It's important that you get in front of that. So best way to connect. Beneath this video, we'll link a couple different resources. Click on any of those based on where you currently are in the process. If you have any questions whatsoever, also my direct cell will be linked below here. Happy to always chat, answer any questions that you have, give you kind of the behind the scenes on what's going on. Truthfully, buying a house is really fun, but it is stressful. It's a massive purchase. It's the biggest purchase you're probably ever going to make. And so you want to make sure that you feel good and that you feel excited, and nerves are normal, but wild stress is not. Okay. The way to avoid that is to get a plan and to get in front of it before you were in the thick of it. All right. Thank you for tuning in. If you enjoyed this video, please subscribe, leave a comment if you have any questions for me, and I will see you guys next time.